Hi, everybody. This is Dennis Wilborn, founder of Active Trend Trading. Thank you for taking the time to watch this free video that we do every week. It is a video where we cover the markets. We also have oftentimes have some trades that we might be setting up that you might want to take. But I want to ask you, before you leave the page, as you watch the video, just give us a real quick thumbs up and share the content with somebody else. Leave us a comment. We'd really appreciate that. So aloha, God bless, and mahalo. Today, got a really good topic that I think you'll really enjoy. But do me a favor. If you appreciate this content, please give us a big like. And also, please share with your friends. We're always trying to build an active trend trading family. So let's get on to today's session. Okay, here we go. The Art and Science of Active Trend Trading. Today is the 25th of February, 2019. The markets have been, just basically on a tear since the beginning of the year, and we'll take a look at each of the individual indexes on that. I want to remind you that all the materials we do present are for training purposes. Traders should always paper trade any new method prior to the risk of their own personal capital. The Art and Science of Active Trend Trading update. We'll take a look at the indexes. A couple of stocks that I just throwing out there to keep an eye on. They have earnings coming up over the next several weeks, and they may be positioning themselves to do a pre-earnings run. Other market driving events, as you all know, they're going to extend the deadline for striking a deal with the Chinese on trade talks, and so the market rallied on that this morning. And again, the market right now seems to be being propped up by, I would say, a lot of news-driven events. In other words, however, there's some underlying things that are taking place. If the Feds are going into a quantitative easing type stance, that could be a stimulus to to put us into a new sustained uptrend, and also to re-energize economies around the world. And that means if they're energized around the world, that could very much mean that products are going to be bought, sold, all that kind of stuff, and so we keep the current bull market moving. Today I'm going to talk about technical and mechanical tips. The wonder of weekly compounding interest is what I'm going to be covering. So let's see what we have here. Hey, don't go anywhere without your mates. This is a shot of me and my old squadron mates over in the Philippines when we were flying. Gosh, it's so long ago. Compounding interest is a lot like making sure you have a team on your side. You have to understand how each of the components of the team go together, and that's what compounding interest does. People talk about compounding interest a lot. Matter of fact, my son Brandon said, well, yeah, everybody knows about compounding interest, Dad. And so it's not really something that's, people want to talk about. And I disagree totally, simply because compounding interest, as Einstein once said, is the eighth wonder of the world. But we'll get to that in just a little bit. Hey, what's going on with the indexes? NASDAQ tends to be a little bit flat through January, February, March. Hasn't been flat this year, of course, if you've been following since the beginning of the year. And so it would not be surprising to see us drive sideways for a while and then go into the April time frame, latter part of April, then spring load up from there. Couple of other items. Crude oil. Crude oil tends to move down the first part of the year. Just the opposite happened this year. What does that tell us? That perhaps the seasonality is a little bit mixed up. It's is what it can tell us. But here we go. Here are the stocks that we're looking at. This is the composite list of the Lucky 13 watch list that we were talking about a little bit earlier. And top in the list is Intuit, Palo Alto Networks, Team, Cyber, Cyber has been a really strong performer for us. We did some spreads in that last week, got a really nice profit on that. But if you're looking for where this watch list is, go to activetrendtrading.com/member-logon-opportunity. And these lists are provided weekly for our members. What does that look like on the website? Well, let's find the website. There we go. Just basically go here where it says members login. If you're not a member, if you're a member or not a member. If you're not a member, you can go to members login. And what you'll have is an opportunity to, hey, just sign up. This is a free sign up. Just have to tell it you're not a robot. And it gets you in. And we'll also, if you sign up for the free service, we'll basically provide you a copy of the Magnificent 7 ETFs. These are the ETFs that we follow with our premium service that have outperformed year after year after year after year going forward, going back. So anyway, go here, sign up. Again, this is for the free service. There's no obligation other than, hey, just take advantage of getting to watch the webinars on Friday, or the How to Make Money Trading Stocks, Options, and ETF webinar. We'll send out a link for you on that. And also, you get this free report, great looking report on the Magnificent 7 ETFs. So, and so let me go back to that, and I'll show you where we hide. We don't hide them, but where the, so once you've signed up, so I'm already logged in. Let's go back here and go, where do I want to go? We put them under the free videos and articles. And here's the last How to Make Money Trading Stocks and ETFs for February 22nd. The Art and Science of Active Trend Trading we did at the beginning of the month. I try to do about 2 of these per month, but I want to make sure that I update the watch list. And so where it is you basically go here, see the recording, go down here, and this show, you just click here, or click there, and it'll take you to the files where you can download those watch lists yourself. And again, the first watch list is the running watch list. That captures every stock that's been on the IBD 50 for the year. Second list is the sort, which basically sorts out on fundamentals, the IBD 50. That provides some additional information of strong stocks. And then finally, the composite list, which is the stocks that show up on the most list. They have to at least turn up on 2 lists to be able to make it onto this overall big list here. You click there. It takes you to a link with my Dropbox, and you can then download the spreadsheet from there. So I just wanted to share that with you really quickly. What else we got going on? So here, I said, keep your eye on NOAA, Palo Alto Networks. Palo Alto Networks has earnings this week. So I think that because these are all in the same sector, Palo Alto Networks may in fact drive what happens in the other stocks here. So, hey, let's take a real quick look at those, and then we'll go back into our other session. Let me find a weekly daily. I'm going to go over here and grab this one. This set of charts is my 3-level charts. On the left, far left, is the weekly chart as the main anchor chart. The middle chart is a daily chart, and the chart over here is the 30-minute chart. So let's take a real quick look at the SPYs. As you can see, spiders kind of bounced up. We've been talking about this resistance level here up at the 281 level. It hit that today, and then it's not necessarily putting in a reversal signal. However, it is showing that resistance came into play, and it's not pushing any higher. Does this mean we're going to fall back down? I would kind of like to see it get a nice pullback into the 8 or the 20, or even down here to the 3450 daily moving average for a bounce from there. However, we'll watch to see what takes place here. The gap up today was specifically due to the news over the weekend of the delay in anything negative with the China trade deal. Qs. Three Qs. Did you know that the Qs used to be 4 Qs? But then they went back to 3 Qs. And so similar type situation here. We got a spinning top doji at a level of past resistance. As you can see here on the weekly chart up here about the 174 level. It is continuing to push higher. Almost have a 3-line cluster in the overbought condition on the market forecast, but no reversal signals to the downside then. It also needs a pullback, even if it's a micro pullback, into a support for a potential trade. IWM. IWM hit, again, similar, hit a high. It's pushing up against past resistance, or actually broke out above past resistance, and is just pulling back a little bit on a daily basis. Is it going to maintain the 200? It would surprise me if it maintained the 200, simply because I think what we're going to do is get some kind of pullback into the 8 or even the 20 day moving average, or even a pullback down in here to this past breakout area. 151 level, 152. That would be an excellent place to, if we got a nice controlled pullback into that area, that may, lend itself to jumping on board for a longer term trade. What else are we looking at? Hey, let's look at those stocks that we were talking about. Just keep your eye on those. Noah. You can tell my bandwidth is a little bit slow this morning. Noah. Okay. Noah has earnings coming up on. Okay. Noah has earnings coming up on the 5th of March, which that corresponds to next Tuesday, and that is after market close. It has spurted on up here. It is at a past resistance level zone that starts at about $60. Look for a pullback into the moving averages, or wait for it to drive sideways a little bit, and then it may bounce from there. So the 5th will be, next Tuesday. So Noah was one of the ones to keep your eye on. The other one was, again, Palo Alto Networks. I won't trade Palo Alto Networks simply because it's a little bit too close to earnings, but it has earnings coming up on. Earnings coming up on this day here, on the 26th. And the 26th, of course, is this coming Tuesday. That's tomorrow. And that's after market closes. I don't know if this is going to lend itself to a earnings trade, like we normally do, or not. But I'm watching this because I think it's going to have an effect. What Palo Alto Networks does will then have an effect on the other two stocks. The one that I was most interested in is Adobe. So Adobe got a little bit of a pop. Well, see, it's just not quite as active to the upside as the other ones. And it basically just broke out of this little flag here, but then it's kind of coming back down into the flag. So what I'll be doing is I'll be watching, this level here, somewhere between 256 and 258 for a potential, hey, that's where we could get a rebound. Now, the thing that makes Adobe interesting to me is 314 is when the earnings are, and that was after market. Add to that our buddy 5. And that's 5 below. Again, also came in, hit up against resistance, and now is pulling a little bit of pullback. Now, you can consider this as a cup, or actually it's a deep V if you want to really talk about it. So not really a cup. This was a IBD double bottom, up, down, Let me draw that in for you really quick so you can see it. Here it is right here. It comes down, it pops up, it comes down, it pops up, and it actually took out that level, and there it goes. Now it's kind of coming back down to retest the breakout area. Another way of looking at this is just draw this is an alternative entry level. And again, it came up, broke out here. Now it's coming back down to retest on that. This looks kind of interesting to me. So 5 may be one of the, something to really keep your eye on. When's its earnings coming up on? 320. And there was that aftermarket closes, so it's 320. And what we'd be looking at doing, if we get back down here to about the 20-day moving average, or at that breakout, or maybe just holds right here just below the 8 or at the 8, look for a reversal and for it to take back off. Again, the 20 would be ideal, or that's on the weekly. So what we're looking over here, the 50 would be ideal. Then it also did a little bit of a breakout down here at the 108 level. I don't think it's going to get that deep though. I really don't. Throw a real quick fib on that. And it already may be approaching. Now we'll go a fib from the high-low fib overall. There we go. Sometimes those fibs just don't grab. There we go, like that. Try this one more time. It didn't grab. Slide this up and see if I can get it closed. Okay, come on. There we go. Okay. So as you can see, it's pushing back down towards the 382 retracement. And so any type of retracement back in here would not be surprised to see a rebound. Watch the intraday charts on this for it to set up. Here's the 30-minute chart. Look for also something on the 2-hour chart. As I'm looking over here on the 2-hour chart, it's not there yet, but it's looking like it's approaching an area where it might get a reversal back up to the upside. And again, it would be a low-risk trade of trading an option that is out in the week of earnings. And again, that was 320. So that gives you some ideas going into the this week on what we want to be looking at potentially trading for the week. Let's talk real quick about the technical aspect of what we were looking at also. So here's a little bit about, here's how we did last year, 36%. I discovered something and I'm just really excited and I want to be able to share it with everybody. And that's the aspect of the thought of compounding. Compounding is a very powerful event that people, we kind of know about, but we really do everything we can to implement compounding into, with our individual trades. I think we get oftentimes so locked up in what's going on with an individual trade that we don't really think about, well, what's the connectivity into the rest of our account? How can we streamline? How can we basically strategically plan out our trading so it will best take advantage of compounding? Because compounding is kind of interesting, and I was looking at, because of the advent, I believe, of weekly options, we have some weekly compounding opportunities where if we can compound, at 5% per week. Now with trading options, a 5% gain for a week is not huge. I mean, is reasonable. And if we compounded on a weekly basis, start out with a $2,000 account, By the end of the first quarter, that 2,000 would have grown to 3,700. Second quarter, continue on the same thing. By the end of the second quarter, we're up to a little bit over $7,000. Third quarter, up to $13,400. Fourth quarter, by the time you hit the fourth quarter, if we were consistent in achieving a weekly compounding of 5%. Now, how would we do that? We could do that through spreads, or we can do that through directional options on a weekly basis. And so one of the strategies that we work with in active trend trading specifically is strategy number 2. And strategy number 2 is a strategy where we basically take a small amount, set aside $10,000, and we wanted to generate $500 to $1,000 per week. And so it hit me, said, well, some people may not need that kind of income right now, but what happens if they wanted to grow their account? Let's say that for whatever reason their nest egg isn't as big as they would like it to be, and they wanted the opportunity to take a small amount, grow it into a larger amount. What would that look like? And so what I'm doing with our strategy number 2 is I'm going to compound it. Now, that decision was made here. I'm looking at, I want, basically to do 5% per week on, and as we move into, here's the numbers, okay? Here's where we ended up the last week, $12,193. We started with an account size of $10,000, and I was just basically shooting for $500 to $1,000 a week. Now, it corresponds to 5%, but now I'm going to be honed in a little bit more focused. And so 5% of $12,193 is a little bit about over $600. So now $600 is my target for the week. Now, if I expand this, as you can see, and then continue increasing at 5%, well, at $10,000, it's going to be a pretty nice chunk of change going into the end of the year. And with that, I can get to the point where I can literally then get built up to a certain point in my account and then just, have it cranking on a weekly basis, generating that weekly income. What does that look like on a longer term? And I said, I showed the, okay, I'll just go take this back to 5%. This is my table. So at 5% on $2,000 by the end of the year, you're looking at $25,000. What happens if I just increased that to 7%? Just 7%, 2 more percent on a weekly basis. Is that doable? Look at how the compounding impacts your results by the end of the year. Again, so our challenge moving forward, and I encourage you, hey, come join us and take advantage of this challenge. Our challenge, be consistent and develop, a winning strategy, which we already have a winning strategy with this particular system of strategy number 2, utilizing the active trend trading alerts and triggers. So we already have a winning system. Now it means, can we be consistent in how we apply it? And so that's what I'm shooting for moving forward. And again, it allows me now to do directional options on some stocks, but primarily we're going to do very measured risk trades, directional spreads that will generate our, in this case, this week, $600+ for the week. If we get more, great. And so that's what we're looking at. And how did we do so far? Well, here's how we've done so far this year. There we go. Okay. We've gained $2,193. And we started trading strategy 2 about the 18th of January. So a little bit over a couple of months worth of time, or a little bit over a month's amount of time. And we want to continue going up. And like our buddy Einstein said, compounding interest is the 8th wonder of the world. He who understands it earns it. He who doesn't pays it. So again, strategy 2 year to date is this much. I want to see if I can compound on a weekly basis consistently at 5%. And I'll let you do your own calculation for at $10,000 what the account will be approximately worth at the end of the year. Is this a guarantee we're going to make it? No, it's not. But dadgummit, I am going to be focused on doing this. So we'll have some fun. If you want to join us, become a premium member. I have a really great special going on for this webinar discount. And what it is go here to this website, and then the password to take advantage of this is SAVE. I have two different offers. One, if you just want to do a monthly, a regular price is $124.99. You get all three of the active trend trading strategies. You can save $50 off of that, or 40%, and get it for $74.99. Or you can save $175 over the 3-month period by doing it on a quarterly basis, $199 per quarter. So until next time, this is Dennis Wilborn saying aloha, God bless, have a great rest of your February. Looking forward to just growth, a really great growth trajectory through the rest of the year. Aloha.